Hi, it's Meredith Stowers. Thanks for your interest in renovation refinancing to pay for that ADU. We can finance 100% of these ADU projects, so let's run the numbers again. First of all, there we go. What's the general cost of an ADU? Typically, for an attached, you're really looking at least $100,000, especially with timber prices. Hopefully, it's less, but oftentimes it's right about that. That's about $450 per month compared to a rent of about $1,500. Conversely, when you're building a detached ADU, even if the structure already exists, I often see 200, really 250,000 or about $900 per month. So for every 100,000 you spend, it's about $450 per month. Conversely, for every 10,000 you spend, it's about $45 per month. Renovation lending is different because it's based on the future appraised value. It is a refinance of your mortgage based on future value. It's a type of construction loan. And quite literally, we send the appraiser out with the pretty designs and the floor map, and he says, "Oh, I see what you're going to build. And based on that, this is going to be the future value." For a variety of reasons related to loan guidelines, we don't typically get 100% of value yet, but we typically get about 75% at least of construction costs. Fortunately, we have gotten our appraisers trained on these, so we do get better values on that. All that matters is that we can get enough value on that. We'll talk about that in a cent. So a renovation is often better than a cash out refinance, even though a cash out refinance is a lot easier. Because when you take a look, there's very little cash available oftentimes with a cash out, but you can get a far greater budget and cover 100% of your costs on your ADU and other things. And for that matter, it's not just the ADU, but take a look at repairs and things on your current home. Take a strategic look at the property and see what you could be doing as well. We can add those into there, even a pool. The difference with a renovation loan compared to refinance is you apply the same way, but we use a HUD inspector. The HUD consultant's job is to oversee construction, and he's the one who authorizes payment to the contractor as it goes. And that's to protect you, the client, and me, the bank, to make sure that construction's done, you're getting what you're promised from your contract, and that it's all can be permitted. This is a very, very collaborative and simultaneous process. I cannot stress that enough. So let's go over the first 6 months out of a year project. First of all, after this discussion, you're going to go out and you're going to get designs done. We also recommend it if you're doing a renovation loan, you get pre-approved to make sure that you're qualified 100% for the loan. And then we in the finance area, we just wait because your designs are going to take about a month and then you're going to submit for permits. Okay. When you submit for permits, that permit process is going to take 2 to 4 months. So, right as you submit for permits, you're going to come back to me and I'm going to introduce you to that HUD consultant. You're also going to choose a contractor. You and the consultant and the contractor are going to meet on your property and you're going to collaborate on your paperwork. The contractor's numbers need to match the HUD consultant's numbers, need to match my numbers. Then we're going to launch the loan with all those matching numbers and we're going to order the appraisal. Sometimes we get a higher amount on the appraisal and sometimes we get a lower. For whatever reason, we're going to huddle back, make sure all those numbers match up together, about 100 pages of paperwork on our side. This is a tough loan. And then we're going to submit for underwriting and approval. And once we have approval, you're going to start construction. Now, what's really exciting to me is that when we start construction, we can reimburse soft costs. So their cost of designs and permits, also the $2,000 for the HUD inspector and the 1,200. Not actually, we can't reimburse for the appraisal, but these soft costs plus designs and permits, we can reimburse you when the loan funds. Also, the contractor is paid 15% of the total amount so that he can get started. You're not to give any funds to the contractor. Moreover, you do not start construction, and this is very important, do not start construction Until that loan is funded, I cannot reimburse you for any construction work until then. Now, we also deliberately try to close the loan at the beginning of any given month, because sometimes you don't want to pay extra on your mortgage until you have to, and particularly if you have a renter. And frankly, at the end, oftentimes with some types of renovation loans, it's a higher rate, usually about a half a percentage point higher than a typical interest rate. So we're going to provide you a complimentary rate and term refinance at the end to get that interest rate back down for the life of your loan. And we do offer complimentary refinances for any future refinances as well. So what does that look like? You close the loan and you start work, right? You have no construction payment for the first month. You're going to actually pay that into savings for month 1 and month 2. Now on month 3 here, you're going to have to make a mortgage statement. Sorry, month 3, you're going to have to make a mortgage payment, and you're going to draw that from savings, right? Just that little bit extra. So if you spend 150,000, it's going to be about $450 a month more. At month 2, you're going to pull that extra from savings and make the mortgage payment. Month 3, construction's almost done, so you should start advertising for your renters. Month 5, construction finishes, you make another mortgage payment. Make another more, and the mover, now the construction's done, the renter moves in, and finally you got to make 6 mortgage payments, and then we will refinance you back down to that lower rate. There's a lot of reasons why we do that. In addition to lowering the interest rate, if we're doing a renovation loan, you have less than 80% loan to value, and that means you have mortgage insurance. Once an ADU is built, oftentimes the appraisers are like, wow, that turned out great. It's actually worth more, especially once you start to take a look at the rental income and so on. So we often get better value, which reduces the mortgage insurance or eliminates it, as well as the interest rate. There are challenges. Obviously, appraisals determine what we can lend to. Federal guidelines are changing in a head spinning manner. But most important, do not run out of cash. You want to plan ahead. And 6 months of payments can be covered if the house is uninhabitable. So if you need to move out of the house because it's just unbearable, uninhabitable, we can finance mortgage payments as part of that, up to 6 loans. There's a maximum of 4 units, but most important, beware of low contractor bids. As a lender, I can't stand it when a contractor comes back to me and says, oh, I need an extra $10,000. Here's the good news. We require a 10% contingency buffer. So if your bid is 200,000, we're going to make you add a $20,000 contingency buffer in case of cost overrun, so you're not out of pocket. If you don't go over, that money simply goes back to your mortgage payment. But we are required by federal guidelines to have that contingency buffer. When we get you pre-approved, we're going to go all the numbers, over the numbers, the entire thing. So you should know every number from the beginning and where 100% of your financing comes from. Next steps: apply, get pre-approved if you want to. You can also check out our ADU estimator at aduloans.net, or you can text me questions. That's my personal cell phone number. But if you want to go over numbers as you get bids in and so on, feel free to book more time with me, and we can go over those numbers. In the meantime, I look forward to seeing what you design. Your next steps are designs and permits. Take care.